Yeah, all right. So Elliot Waves was named after Mr. Ralph Ansel Elliot, who did his work in wave patterns in 1930s and 40s. Elliott wave is based on how groups and masses behave. It's one kind of a technical analysis. There are like harmonics and all. It's another kind. If you use all technical analysis, you will reach at the same conclusion. Say head and shoulders will work. The pattern will be like an Elliott wave's impulse and corrective pattern, right? He came with 13 patterns of waves. He suggested recur in the markets. You can see those patterns in larger as well as smaller time frames, like this one, right? These are the smaller patterns inside a more larger pattern, right? And then like this. So it happens in 1 minute time frame as well as 1 month time frames. All right. Anybody has any problems, you can ask like right then, and I'll go as I'll answer as I go. All right. So the basic pattern of Elliott wave theory is impulsive waves and corrective waves, right? Impulsive waves and corrective waves, right? Impulsive waves are made up of 5 subwaves, and corrective waves are made up of 3 subwaves that move against the trend of the next large size. Like this one, this is corrective wave. This is moving against the trend. This is the trend, and this is the corrective wave. All right, these are the corrective waves. And this is the corrective wave here. All right. Uh, uh, there are many types of different types of corrective structure that we will go through. But first, the impulsive waves and its rules. All right. You can see the correct impulsive wave and corrective waves, right? All right. Go. Right. Wave two. This is the five ways structure. All right. Wave two can never go below wave one. Wave 4 can never enter the area of wave 1, and wave 3 cannot never be shortest. It doesn't have to be the longest, but it can't be shortest. Alright. So can anybody say why this is incorrect? The first one? Anybody? Like I need a reaction to follow, otherwise I'll think you can't. Alright. Wait, let me see who is here holding hands. Where did you get that? No, just answer. Just write in the questions or chat. Alright. Wait, it's not set up correctly. Alright. Vinay RK said, alright, he said rightly, wave 2 cannot be below wave 1. Alright. So, this the next one. If somebody wants to answer that one, that'd be nice. Like this in here, no. Sorry. Wave 2 cannot, it's not that. See, the wave 4 is below wave 1. This is the wave 1, and the wave 4 has gone below this one. Right. In the second one, it's incorrect because why is it incorrect? Anybody can tell? Alright, leave it. I'll tell you. Go it later. This in this one, the third wave is the smallest. So yeah, alright. Yeah, this is the right one. In peak 2, third wave is the smallest. That's why it can't be there. So the third, this way, this one you have to make it like this, right? This is inside wave 1, 1, 2, inside wave 1, or like that. I don't know how I is given like that, but you have to be minor. You have to do these are the minor waves, right? It's like this. or this would be the 1 2 3 1 2 3 4 5. It will be like that, and this will be 1 2 3 4 5. It will be like that, right? This is the correct counting, and this is another. Oh, why is this incorrect counting? The last one. Anybody? Okay, the wave 2 is below wave 1. The first one said. Yeah, yeah, same. Ismail said. Now, before going ahead of that, I'd like to first tell you how you should trade or could trade. I mean, many people who would be new to this one or just hearing it would be like, why should we hear it? Right? Though, I'd like to go where you can enter and where you can trade. Right? You can enter in wave 3 or wave 5, because when you first go in, you don't know when the wave 1 is forming, you don't know what it is, and same with wave 2. But after wave 3, you can have some idea, right? And this is many cases 1.618 or 0.618 or some Fibonacci ratio of wave 1. So you have some idea. There's a handout that I've given which calculates the wave ratio, means calculated ratios, right? What would be wave 3, what would be wave 4. So if you want, you can download it and check it later. It's generally about the fib ratios of wave 3, wave 5, wave 4 generally, right? And then you can also enter wave 4A, because this is like you can calculate 0.618 of this, or wave 1, or 1 of equal to wave 1. There are some rules when you start following, so you can see you can have a guess that when will wave 5 end, right? So if in your predicted place wave 5 ends, so then you know that wave A has started, right? So wave A you can take as a short, and then then again wave C would have some would be in a fib ratio of wave A, so you can take that also. So there are some easier ways to you can trade, right? You can also enter wave 4 here, or wave B, but these are corrective patterns. But in many cases, these are like they form a triangle or go sideways for some time. So it's better to like trade them in by options. But first, you have to get good at Elliott waves, right? So these are wave 3, wave 5, wave A, and wave C. These are easily tradable waves. All right. Uh, okay, other impulse wave nuances, the other types of impulse wave, there is a leading diagonal. Why I'm saying is that a leading diagonal, this is how a leading diagonal is in a bull market, and this is a bull market. Here you will see that wave 4 has gone below wave 1, right? Here wave 4 has gone below wave 1. So this happens in diagonals only, but see the sharp reversals, right, in both cases. So this is one way you can trade. You know that this is gonna end. So when it's gonna end, it's gonna go up sharply. This will be very sharp, so you can play on that one. Right, today you have you will, if you see PVR, wait, let me tell you that. That was the ending diagonal. That was that was the leading diagonal, and PVR today was an ending diagonal. It's just expanding or ending. Wait, let me see. Uh, this, why hasn't this come? This, right? This one is another type of nuances in the impulsive wave is truncation. This happens when wave 5 isn't that much strong and isn't able to pass wave 3. This happens. So if this is happening, that wave 4 comes, then it goes up for wave 5 but isn't able to pass wave 3. You know that the movement is very weak, and it's gonna go on the opposite side. So remember these three. Mostly this one, ending diagonal. You will get a lot of profit from ending diagonal, and the reversal will be very sharp. You have to be in the lookout, right? Keep some alert or something for that one. There's another thing about impulsive wave is extension. If you see that wave 1 is the longest here, right? There are inside smaller waves which are 5 waves, right? In this one, wave 1 will be the stronger in the minor waves also. This is how wave 3 is extended. This is how wave 5 is extended, right? Generally don't ignore that because it will go above your head. These are three types of extensions: wave 1, wave 3 and wave 5. Same in bear market. So now to the corrections. So corrective waves move against the broader trend, right? Corrective waves can be simple or complex, but they are generally complex. Alright, generally they are complex. Corrections are never in a 5-wave pattern, right? Three types of common types of corrections: zigzags, flats, and triangles. There are complex correction is a combination of these two, generally flat or zigzag or triangle. It's like that. You have to see zigzag, flats, and triangles. So this is how a zigzag is. This is what simple ABC, like there's go 1, 2, 3, 4, 5, and then go ABC, ABC. So this is a zigzag. It is a simple, and this is a double zigzag. ABC, ABC. So this forms bigger ABC in a larger time frame. So it's called WXY. It has two ABCs, and this is a flats. There are three types of flats: expanded flat, regular flat, and running flat. Mostly you will get expanded flats like this. An example of an expanded flat. Flat triangle. Right, this is a regular flat, and this is a running flat. Let me show you. Let me see this example, and I'll get back to you on that one. Right, and these are the triangles. Wait, let me tell you many different examples of how triangles are. This is one type of triangle. See that A B C D E. Right. See the move. See the move here. This is another type of triangle I had made. A B C D E, but it didn't go fully. I expected it to go here, but it just went here and then reverse. So this is a failed one. If you hadn't exited at the right time, then it would made no. It will still make you profit. You take the trade. You can take the trade here safely, or you can take the trade here if you are that confident. This is aggressive and this is safer. See this one. I expected the trade to go till here. It means the calculation is this much calculated from here. It goes here, right? It goes something like there, but it dropped. You see the national aluminum. You see this one. I had taken the trade when this came here. I knew this is surety, and I took the trade. It went here and then it started going up, so I got out, right? And now you see this happened. If I had kept the trade, then the profit would have been higher, but what can I do, right? A failed trade. Wait. Okay, already showed you that one. So if you can see in the triangles that the whatever the movements are, they are very fast. When the movements happen after a triangle is breached, it's very fast. But in all the triangles, you will see that one A B C D E it goes, then it goes down but again it goes up. This is normal. It's expected. See in national aluminum. See, this goes down and then it goes up, breaks it, and then it goes down. This is it happens all the time. So you have to be good with these kind of things, the corrective waves, before taking the plunge. For now, just play on wave 3, wave 5, wave A, wave C. Wave 4 and wave B, the corrective waves make a lot of money, but you have to be good at it before taking the trade, right? So these are the kind of triangles that we have expanding. See, it came from here, it corrected here, went up here. Barrier, right? You can say that extend. This is a this is ascending triangle. This is a descending triangle. In other technical terms, here it's called barrier triangles, right? For bull market and for bear market. Same here. Right? See, contacting triangles. These are the combination, right? A zigzag, then a corrective A, B, C, and inside that a zigzag, then a flat. And the triangle always precedes the final motive wave. So wave B4 or wave B generally. Or Fibonacci ratios are important in all that because like say for ABC. Wait, in this indigo chart, generally wave C is equal to wave A. In many cases, it's 0.618 of wave A, right? So when it went here and it crossed B, it came down here, right? And I thought, okay, it has caught 0.33236 and now I'll go short. But again, it reversed and I had to get out, right? But now it's going down and it will probably go to at least here. But when I was thinking of taking this trade, I thought that although charts are saying it, but Elliott Wave is saying that it will go down. And now, due to coronavirus, it looks like it will go at least till here. That time, it was seen as very improbable that this will happen. But see this. If you see the whole chart, like say from this is March, like this, you can't see anything. But if you see the like that, and if you can calculate it, then this was the 1, 2, 3, 4, 5. I had hidden this or something or deleted it, but it is 1, 2, 3, 4, 5. It was the 1, 1, 2, 3, 4, yeah, 4, 5. Then A, B, C. This equals 0.786 in the whole impulsive wave and is equal to the wave A. So this is how you trade Elliott waves. Now to the flats. So the expanded flat. This is the most common type of flats. What happens is wave B goes above wave uh, wave A, and then it is expand. All right. This is you can say this is actually a running triangle. A regular flat is like that. The B comes to at the start of a wave. This is even wrong, and the C goes a little slightly about equal to wave way, right? And this is the running flat. You can see the structure on how it is, right? It is going up, slightly up. For many things, like for wave C, a wave C would be 0.618 or 1 or zero point 0.5 of wave A. Mostly it's 0.618 or 1.1. Right? You can do it like that. Wave 5 would be wave 5 would be right either equal to wave 1 if wave 3 is extended, or if wave 3 is less than 1.618 of wave 1, then it will be a Fibonacci ratio of the combination of 0 to 3. So this wave would be 0.618 or zero point 0.1 or 1.618 of wave 5. There are many other types of like calculations to get what will be the ratios for various waves. So you can as you go deeper into this, you can get better at it, right? So something to know that the price action between A and B, right, it will be increasing, right? A will go down and then B will be correcting, so it will be increasing. But when the correcting B has stopped and it started as C has started, then the volume would decrease because the participants are less and less inclined. This is a all right. So you know that it's a bear market, right? So after wave C has ended, all the five impulsive and corrective waves are ended. Then this has meant that the pattern has broken. Then a new pattern starts, right? With increasing volumes generally, right? If wave 2 is a simple correction, right? Say wave 1 A B C A 1 2 3 4 5. Wave 2 is a simple correction. Then wave 4 would be complex. Complex as in like this triangle or flat, something like that, right? And vice versa. And you have to remember the Fibonacci ratios. All right. Uh, any questions? Let me give you more of my charts. Here is an extended wave. If anybody can point the ABCD, here it is. By the way, look at the fib here, right? I had calculated it long time ago. So this one, it came around 1.618. Another fib bit. Somebody had told me that I had calculated wrongly, but the fib came quite correctly at 2.618 at the height. The C here was calculated based on the length of A, right? It has already passed it, so it will if it has passed 1, then it will go to 1.618. Whatever the there is, it will go till that. So more. Same here. The C calculated based on A size of A, it has gone down. That means this, by the way, B here is a very complex correction. It has gone down for some time before dropping. All right, it hasn't gone down slowly. It has gone sideways. Then it start dropping here. All right. This was point 1, right? If you can see that the wave 3 is just around there, but since it has broken, it will go to 1.618. This is GMR. If it breaks this level, then it will go to 1.618 of A of this, right? A of this 1.618 is its next target. This is or equal to about the start of wave, at the end of wave 4. All right. So any questions? Since there is no question, so I might as well end the webinar. There are only